next topic under technical analysis is Fibonacci. Fibonacci is used to identify possible reversal zones after an up or downtrend. In technical analysis, Fibonacci retracement is created by taking two extreme points on your forex chart and dividing the vertical distance by the key Fibonacci ratios of 23.6% ratio, 38.2%, 50%, 61.8% and 100%. Once these levels are identified, horizontal lines are drawn and used to identify possible support and resistance levels. The two Fibonacci levels are used the most are the 50% and the 61.8%. I really do not focus at all on the others. Now, if you are using MetaTrader 4 trading platform, the Fibonacci tool has an icon as shown on the chart. Now, here are top 3 reasons why you need a Fibonacci retracement tool. The first, in a downtrend, after price has been going down for some time, it will move back up, which will give us an upswing. The Fibonacci tool can help you estimate or predict potential price reversal areas or levels. The second, similarly in an uptrend, price will make minor downtrend moves, that is, downswings, and the Fibonacci retracement tool will help you predict potential reversal areas or price levels. The third, if used in conjunction with support and resistance levels and combined with price action, they do really form a powerful combination and do give high potential trading signals. How to use the Fibonacci tool on the MetaTrader 2 video. Good. Now this is the MT4 software. You can use this to log into any MT4 account. Now if you open a live account and you are given credentials to log in to MT4, you can use that credential to log in on your application on the phone, that is your MT4 app, and you can also download this software, which is available for the Windows and Mac users. Before I begin, this is the first video I'm showing you this software. These are your time frames, your 1 minute, 5 minute, daily, weekly, monthly time frame. These are the rectangle, the triangle, which you can use to draw your chart patterns, and this is the trend line. You can use this to plot a trend line like this. This is my bearish trend line, and this is another bearish trend line. A bearish support, bearish resistance, and you can also use this horizontal line to plot out your resistance here, resistance, and price is about to reach this resistance. I will now remove all this tool because this is not what we are about to discuss. We are about to talk about the Fibonacci tool. At this point, if you scroll your mouse to this point, you will see the Fibonacci retracement tool. Now, I already told you that the Fibonacci retracement tool is used to find potential reversal points. Okay, let's assume this hasn't formed. Okay, you discover that price has moved from this level, from this support level, to this resistance level. Okay, like I said, let's assume these haven't formed. Okay, price has moved from this level to this level, and this is a resistance level. so you are expecting price to drop. Okay, but how far will price drop? Will price reach this place, or will it come back down to this support level, or will it come back down here before going back up? Now the Fibonacci tool can help us answer this question: how far will price pull back? Now, how to draw your Fibonacci tool. If you want to find how far price will pull back after a bullish trend, all you have to do is click your Fibonacci retracement tool, come, and then you click once, do not release your hand, and then you draw up to the highest point that the price is currently at. Now you then release the mouse. Now this will plot out a potential reversal point for you, and these are the Fibonacci tool we discussed here. We said the 100% ratio, here it is. We have the 61.8, 50.0, 38.2, 23.6. One thing to note about these ratios is that they are also support and resistance zone. Like for example, this 61.8 ratio, if I pick my rectangle to be able to draw that point exactly, you find out that price reversed at that point. If I put my zone here, and now at this 61.8, you can see that when price dropped, it went back for a retest. Now as resistance, after touching this resistance, it dropped. When price broke this resistance, it came down to this as support level. Now this tells us that this 61.8 ratio is a legitimate support and resistance zone, and also that goes for the rest. This 50% ratio, they are also support and resistance. You can see after price broke this resistance, came down as retest, which is now support level before going back up. And also this 38.2 ratio, we have support level. The price respected this level a couple of times. And also this 23.6 ratio, we have this pullback and this pullback. It means that our Fibonacci tool is very, very relevant. Now after drawing your tool and you found out that okay, price has given you a signals that it will drop at this resistance, and you have drawn your Fibonacci retracement tool to be able to identify how far price will pull back. That means from this resistance down. Now I told you that I don't focus on these 38.2, 23.6 ratios. I mostly focus on 50.0 ratio and 61.8 ratio. Well, that is the ratio that most traders use. 90% of traders watch out for these ratios, 50.0 and 61.8. Now if you notice that after price reached this resistance, it dropped down to 50.0 ratio. Now this is how powerful the Fibonacci tool can be. It can tell you how far price will reverse. Like in this case, price reversed to the 50.0 ratio, and then it gave you a hammer candlestick reversal and a spinning top reversal candlestick before pushing back up. Now remember that this is the monthly time frame, so in order to get better entries at this resistance before it dropped, you have to go back to 15 or 30 minutes time frame, where you can get a nice chart patterns or candlestick reversal patterns, and then you sell. What you do is you then go back to higher time frames like this monthly now, then you put your take profit at this 50.0 lot size. Remember, this is a monthly time frame, so it will take probably year, 1 year, 2 years before price will come to this ratio, because this is the monthly. Now, as if you are a day trader, you probably put your take profit closer enough, because you are concerned in making profit in just hours. Now, I've shown you how to draw the Fibonacci tool for finding a reversal point for bullish. Now let's check for a bearish, and I'll go back to the I'll remove this one so that chart will be clear. And this is, we will look for a chart, that's a point we can use to okay. Now I earlier showed you for a bullish. Now let's check for bearish. Okay, price is here. For example, price broke, let's see, here is a zone. Here is a zone. When price dropped from this level to this level, it pulled back. I'll remove this. When price pulled back, it met this resistance, it then dropped, broke this support level, came back for a retest, it dropped, and then pushed back, coming back to this resistance. Now, for example, from this level here hasn't formed, and let's say price is currently at this level, and you've seen this pin bar reversal candlestick and this doji, which indicates that market will pull back, and it also indicates the slow on momentum, and tells you that the bears are getting tired of pushing price down, so price will most likely go back up. In order to know how far price will pull back, let's see, is it from this level to this level, or from this level back here? We are not sure. Fibonacci will also help us. You click on it, and then you click from the highest point down to the level that it is, and then you release your mouse. Take a look at this. From this level to this level, it gave us a 61.850.038.223.6 ratios. I told you that these ratios are also support and resistance. If you look well, you see that this 50.0 ratio is the same resistance that we earlier drew using this white rectangle tool. Now, when price came to this same 50.0 ratio, it dropped. Same thing goes for other patterns. Okay, let's say after reaching this resistance, okay, here is a 50.0 ratio, and it then dropped from this level to this level, and then it gives you a reversal chart pattern here. You take a look at this level here, you can see that it has given us a double bottom chart pattern, and here is a support level. In order to know how far price will pull back from this level, go back up, pick your tool again, click from the highest point that you want, back down the lowest point. You can see again, I told you the two ratios that most traders use is the 50.0 and the 61.8 ratio, and you can see that after price giving us the double bottom, it pushed higher. After touching this 61.8 ratio, it dropped. Using Fibonacci tool is very good for you to get to know how far price would pull back before another drop.